Hi guys. Today we will analyze Ford Motor stock, and calculate its intrinsic value using two different valuation models. Enjoy! Hit the like button and subscribe to my channel if you want to see more videos like this. Technical analysis. In the last year, Ford was an average performer in the overall market. There are some doubts in the very recent evolution. The short-term trend is negative, but the long-term trend is still positive. However, this may be a trend turning. Be careful. Support levels are around $16 and $14.50. The next support levels are around $13.50 and $12.50. Resistance levels are around $18.10 and $19.20. The next resistance level is around $20.30. In the last month the stock has been trading between $15.80 and $18.50 range. It is currently trading near the lows of this range. The stock has an average volume of 112 million. This is a good sign as it is always nice to have a liquid stock. Intrinsic value. Buy low, sell high. We have heard it many times before. But how to know when it's low, and when it's high? The intrinsic value of a stock is its true value. It refers to what a stock is actually worth. Even if some investors think it's worth a lot more than that amount. Intrinsic value is important, because it can help investors understand whether the cost of a stock is undervalued, or overvalued compared to the market value of the stock. Let's calculate the stock's intrinsic value. For more accurate results, we will use two different valuation models to calculate the intrinsic value of the stock. Discounted free cash flow model, using the formula below, then, valuation based on earnings per share, 5-year average P/E ratio and expected growth rate. First model. Discounted free cash flow valuation. This spreadsheet contains some financial data that we will use for the stock valuation. We see that the average revenue growth rate of the stock has been around -2% per year, for last 5 years. We see that the average profit margin of the stock has been around 4% per year, for last 5 years. Also we see that the average free cash flow to net income rate of the stock has been around 131% per year, for last 5 years. And we expect 8% per year average stock market return. Now, let's consider 3 different scenarios for Ford Company: bad, average, and good. First scenario. Ford will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be low, 2%. Future profit margin would be low, 2%. Future free cash flow to net income rate would be low, 80%. In this case, the fair value of the stock today would be $11. Second scenario. Ford will have average performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be average, 4%. Future profit margin would be average, 3%. Future free cash flow to net income rate would be average, 90%. In this case, the fair value of the stock today would be $17. Third scenario. Ford will have high performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be high, 6%. Future profit margin would be high, 4%. Future free cash flow to net income rate would be high, 100%. In this case, the fair value of the stock today would be $25. Second model. Valuation based on earnings per share. This spreadsheet contains another financial data that we will use for the stock valuation. The current earning per share price for the company is 4.43. Minimum rate of return. I will use 12%. Because when we invest in individual stocks, we are looking for a higher return than the S&P 500. For Ford Motor, analysts forecast growth rate around 8% per year in next 5 years, and future P/E around 8. Again, I will use 3 different scenarios for Ford Company: bad, average, and good. First scenario. Ford will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be low, 2%. Future P/E would be low, 4. In this case, the fair value of the stock today would be $8. Second scenario. Ford will have average performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be average, 4%. Future P/E would be average, 6. In this case, the fair value of the stock today would be $14. Third scenario. Ford will have high performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be high, 6%. Future PE would be high, 8. In this case, the fair value of the stock today would be $22. As you can see, today the stock is fairly valued, $16, if we expect the company's high performance in future. While Ford has a decent profitability rating, there are some concerns on its financial health and its future growth. The stock is currently fairly valued. I own the stock, my cost basis is around $10, and I may consider buying more at these levels. Company's strengths. Ford Motor is the second largest U.S. producer of cars and trucks. It manufactures and sells automobiles on 6 continents. With about 175,000 employees and 65 plants worldwide, the company's automotive brands include Ford and Lincoln. The company also provides financial services through Ford Motor Credit. The company has benefited from strong consumer spending, stimulus payments, low borrowing costs, and high savings rates. Ford has a positive view of the company's improved balance sheet and clearly defined financial targets, and looks for renewed growth beginning in the second half of 2022. Ford's EV strategy is the most prudent of the major U.S. automakers, and it became the second best-selling U.S. EV manufacturer in 2021. Ford's vehicle portfolio has momentum from the Mustang Mach EV, Bronco, F-150 Lightning pickup EV, and other new models. The company is trying to be technologically adaptive. They have a great opportunity to produce fuel-efficient cars and commercial vehicles. Ford's return on assets of 7% and return on equity of 37% are amongst the best of the industry. Ford has a profit margin of 13%. This is amongst the best returns in the industry. Risks. The company has been plagued by the semiconductor shortage and related supply chain disruptions. As a result, it recently had to halt production at 8 North American factories. Like its competitors, Ford faces risks from general economic weakness, as well as from changes in consumer preferences and spending patterns. The company is also at risk from higher costs for components and raw materials, as well as from supply disruptions. Ford also operates in a highly competitive industry that continues to show signs of excess manufacturing capacity. Ford has a poor reputation compared to its European and Japanese rivals. Ford is highly dependent on the US and European market. It limits its profits and revenues. Compared to an average industry debt-to-equity ratio of 0.17, Ford requires more financing than its industry peers. 90% of its industry peers have a better debt-to-equity ratio. Based on estimates for the next 5 years, Ford will show a small growth in revenue. The revenue will grow only by 8% on average per year. The earnings per share will grow only by 7% on average per year. Thank you for watching. If you found this video helpful, please hit the like button and subscribe to my channel.